gentlemen, good evening. This is Christopher Aaron. I hope you are well tonight. It is the 5th of July, 2017. Let us look at what is happening in the precious metals and what to expect from a technical basis over the next several weeks. Turning first to the recent action, we are looking at spot gold prices first. This decline was what I was warning about last week. We can see very clearly when the support right around 1232 was taken out, boom, gold fell quite strongly in the hours after that, compared to the declines that we had seen prior to that. And then a little bit of basing action here over the last couple of days. I expect further declines in gold to come over the next several weeks, and we will put this into perspective just in a moment. Let us switch over to silver. A serious decline here, 50-cent decline on Monday, which was a slow market day, being the 3rd of July, Canada Day, so Canada's markets were closed. U.S. markets were light, shall we say. So some entities took the opportunity to sell a significant amount of silver on this day. Yet this cannot be discounted. And for those who say that, well, that's just the paper market, I'll tell you, I have made some significant money in the paper market by knowing, or at least anticipating ahead of time, that this decline would come, and I can take that paper money and buy more physical silver with that now. Thank you. So I think there is something to pay attention to, even if you are just a stacker. I don't mean to say just. It's a very important thing. I am a stacker myself, but I don't have to be all or nothing. I am willing to short in the paper markets if I think a setup like this is coming. And I suggest maybe if you are open to this type of thing, you consider doing this in the future when you see the right setups, because it is nice to make, if we are going to take some losses on other parts of our portfolios, the physical or the mining sector, it is nice to make up for that to some extent with a profit in the paper markets, which then can be converted to whatever it is that you want. So that's where I come from with this whole thing. Looking at the gold market first here, once again, to start. Now, I kept this chart exactly the same from last week. So if you want to go back and watch the video from 1 week ago, this will tell you we were looking at this triangle here, and I said this was going to be an initial first test. I said we had leading indicators saying that this was going to break to the downside. I said it had to break at some point in this triangle. But in my experience, when you have triangle patterns, they do not wait for the very apex, which would have been the 1st or 2nd week in August. They tend to break at some point about half or 2/3 of the way through the pattern. And if we really wanted to be strict here, we could say this triangle dates back here from the March low. You know, this green shading, you could say, was this first swing up here to 1295. Back down to 1220, back up to 1295. So this triangle broke here about 3/4 of the way through. I was identifying the final convergence here. It did indeed break down. What was I using to anticipate the breakdown? It was the relative weakness in the mining complex. We can see this very clearly. Comparison of the GDX on top and the GLD, which is a gold proxy paper fund, on the bottom. And you can see at each of these highs in the gold price, the mining complex was making lower highs. So significant bearish divergence here, and then boom, a break below this rising trend line here. That was the leading indicator. I would say if you like to have the opportunities to make these sorts of trades, this is something to follow on your own. Set up your charting to always monitor on a daily and on a weekly and on a monthly basis the relative performance of the metal versus the miners itself. For gold, I like the GDX. For silver, I like to use some other indices, either the SIL Fund or Silver Wheaton, which has now changed its name to Wheaton Precious Metals. I find those to be the two best indicators for silver. But the GDX includes silver miners, so it kind of works for both across the sector. So I would encourage you to monitor that if you like to do this kind of trading by yourself, or if you don't and you just want the opportunity to profit from declines like this and for someone to do this analysis for you, this is what we focus on week in and week out in the premium service. This goes out to subscribers. We are looking for divergences like this, even as we are saying that this is still very early in this gold cycle. This pattern, even though we've had a short-term breakdown here, this pattern still could resolve higher. And we will be looking at those leading indicators from the mining signal, from the mining sector as this starts to work into the end of this pennant consolidation. And the move that is coming will be a breathtaking move. The profits or the losses to come when this thing resolves, if you are at all participating on a leveraged basis or in the mining sector, this will basically make anything seem to date like nothing, because the move that comes from a inherently neutral triangular consolidation such as this, when it finally breaks, is going to be major. So we've just been trying to align ourselves, okay, make some short-term profits on the way down, offset some of the losses that we had earlier on in this year, get back to a mostly neutral stance, and prepare for the big move to come. That's how I see this thing. Now, turning back to the pattern here in gold, the technical, now here's the challenging part, the technical target right now for this breakdown, and you can see as soon as this line was broken, boom, there's no hesitation there. The technical target is actually right here at the lower end of this rising support. So this will be very interesting to watch. I do think gold is moving lower over the next several weeks. And I do think it is going to test somewhere in the vicinity of this lower rising trend line. And it'll be very telling to see what happens at that bounce. We will probably take some of the paper profits on the short positions that we have somewhere in this vicinity, depending on, again, a lot of the leading indicators, especially the Japanese yen and the mining complex, the relative strength. But we will look at that as this approaches here around 1170 is my best estimate at this point. Of course, I evaluate these markets on a daily basis, so nothing that I say at any one point should be taken to be absolute gospel, because everything in life, including the markets, is constantly changing, and it's prudent to always reevaluate your assumptions on a regular basis. So that's what I'll be looking for. It'll be a very big test, especially if this were to break lower. That would be something that I'm very much watching for, including the possibility of a false breakdown. We will get to that when we come there. For now, I look for lower gold prices over the next several weeks. Turning to silver. Okay, so this line has been invalidated, the rising trend line from the lows. And I want to provide a little feedback. I actually had a number of people send me messages, send me emails about this same idea. And I found it a good idea. I love to hear other ideas. I never claim to have all the answers. I do have a system that works for me more often than it does not. But I would say that I'm always open to new interpretations. So I appreciate all the people that sent me this idea. And the idea was this: if we have a rising trend line here from the bottom that was broken, a bit of a false breakout, and then seriously broken here in June, perhaps this trend line is incorrectly drawn, or perhaps the real trend line we should be looking at was from this February low through the early April low, through the December 2016 low, through this May low, and through these recent little attempts here in June. So just as far as the end result goes, this trend line has been broken anyway. So this is no longer valid. Even if this was sort of the correct trend here for the silver market, this has also been broken. So we can see this is no longer valid. But I'm going to tell you why in general, and this is as an overall theme of analysis of markets, I would not be big on this trend line if I were evaluating silver from a technical basis. And that is because it ignores the absolute low of a bear market, of a 5-year, almost a 5-year bear market. And this low was not a spike low either. This low came down in October, November 2015, ground around the bottom for, this was 8 or 10 weeks of grinding. So if you're going to ignore this low, I would tell you that there was a whole lot of buying and selling happening here that was not ignoring this low. We can see false breakdowns. They tend to be spike moves lower or short-term moves lower. Me personally, I'm not comfortable ignoring this bottom here. So that's why I would prefer to draw my trend line from the all-time bottom. Now broken, so let's get rid of that idea, although it is a good idea. It's always good to check other ideas in the markets and see if they are working better than the primary hypothesis. Now notice here, this was not random either. Unfortunately, I had to add some further short-term shorts here, just in basically a day trading account that I use sometimes, because I looked at this and I said, so this was the first attempt to break down, second breakdown, and look, it retested that line, tried to break above it and failed, and then boom, we had this decline. So we're talking here about a market that's really struggling. The silver market does not look good at all. And I want to put this into perspective. And by that, I mean we are now testing this December support at 1575. Basically, it's testing this vicinity. I don't think that silver is going to move a whole lot lower as far as the absolute price. Even if silver goes back to 1375, which I think is still a possibility, or even if silver goes slightly below that, 1350 or 1325 at some point later this year, the bulk of the damage price-wise has been done. So I don't think this is something where if you've got a long-term time horizon, you got to, dump all your silver now and try to buy it back a couple dollars cheaper, because that may not happen. You never want to have an all or nothing attitude. So I continue stacking into these lows. I don't care if it moves lower for my stacking holdings. I try to get the timing right for my trading more so. But it's not so much that. But what I was hinting at last week and what I think might be shaping up here is that if silver breaks this support and ends up retesting these lows, what it's telling me is that the bull market is going to be delayed. It's not so much that the price is going to be moving lower that much more in dollar terms. It's that this grind might be followed by another sort of advance, and it's off my chart here, but another grind after that within this, let's call it $13 to $18 zone. This could go on through 2018 into 2019 before we have the beginning of another attempt to break over this 21-25 level and really resume the bull market. That is the big one that I am attempting to align myself with, because I think when silver starts showing that it's retesting these $20 levels and then makes a first attempt above it and maybe comes back down and another attempt higher, I think it's telling you that next challenge at the $50 level is not too far off. So that's the big move that I want to get prepared for in these lows. Okay, so just once again, going back to the gold market, this is our primary concern. We've got to watch this. I would say what gold does at this rising trend line will give us a very strong signal. Is the bull market coming? in the fourth quarter of this year and continuing in 2018, or is this something that is going to take more like another 12 or 18 months of basing before we have another legitimate attempt at that? That is what's on the table. And I do thank you for watching. Always an exciting time to be in these markets. These are the historic stores of wealth for mankind for 5,000 years. There is a ton of manipulation. There is a ton of trading. There's a ton of changes in these markets, new markets arising every day. Shanghai, new Bitcoin type, electronic gold type markets. So it's a fascinating time to be following these, and I do thank you for watching. And all of my signals go out to premium subscribers in real time. You can find the link to that on the main website if you're interested. And if you have a unique situation that you would like to speak with me one-on-one to get my take on anything regarding buying or selling physical metal, mining shares, or options or futures, I do work with individuals on a one-on-one basis. Thank you very much. Have a lovely evening, and I'll see you this time next week.